How's the Fed rate hike going to impact multifamily investing? Stay tuned. Hello, everybody. Jake Gino here, and today we are discussing how will the Fed's rate hike impact multifamily investing. Gang, there's no doubt that folks are getting nervous about the economy. Every business discussion I have, every business person I speak with has something to say or an opinion on the economy. Recession's looming. Probably so. Look, stock market getting hammered. Some companies are doing layoffs. Tesla just announced 3.5% of its workforce. Bye-bye. Sorry to hear that, folks. Not celebrating it, just stating the facts. The Fed announced a rate hike of 0.75 point, representing the biggest increase since 1994. Maybe some of you weren't even alive at that point. So why are they doing this? We don't sugarcoat things here. The government has printed too much money, and it's attempting to cool the rampant inflation with higher interest rates, okay? Suck some of that liquidity out of the market. So what do you do as an investor, and where are the opportunities? We have the G-Dad here. He is the voice of reason. So G-Papa Funk. How will the Fed's rate hike impact your multifamily investing strategy?
Mr. Yaki Boom Boom Stenziano. First thing, we can't sugarcoat things at Jake and Gino because I'm off of sugar, bro. You know that I can't have the sugar anymore. So I'm off of sugar.
Dude,
so
it's about having a good family. His wife takes care of him. All right. That's all I got to say about that.
I mean, it's not the fat, everybody. It's the sugar that'll get you. But anyway, what happens when all of a sudden the last 2 weeks here in Florida, you're seeing open houses? Price reductions. The residential market is caving in. The residential brokers are running scared. People can't buy homes.
You're saying they got to work now.
Well, what do they do?
Someone's going to hate me right now.
You don't sugarcoat things here. Yeah. I'm trying to sugarcoat them a little bit now. But what really happens, Jake? Residential market is imploding right now. People have to rent. That's what's going to happen. Nobody's been talking about
middle class getting crushed. Rates going up.
And I've been talking to some residential brokers, big brokers in Tampa. The market has shifted so quickly. And this is what we've been talking about for years at Jake and Gino. What happens is it happens so fast, especially like the stock market or crypto. Bitcoin's down 60%. It happens like
What's that?
And we're staying away from crypto, right?
What is that?
This is what happens, everybody. Down below in the comment section, I want to know, give me an idea of what's going on in your part of the market, in your residential
market.
Very
localized.
What's going on? You know, in Tennessee, people are still moving there. So our residential is not going to get hit as much. I think prices have to drop because people buy homes on payments. So if you're buying a home at 2% and now rates are going up to 6%, that payment is going to go up. So that price has to come down to match it. But with multifamily, I think the reality is rents are not going to be going up at 20% a year. Let's face that fact because we can't impoverish the resident base. But you know what, Jake? People are still underwriting for that. And that's the problem. These companies like BlackRock, they're buying these residential homes, these built to rents, and they're projecting really big rent hikes. Be careful. It's buy right, manage right, and finance right. You need to buy these on the right end. Operators are going to have a harder time in this part of the cycle to operate. That's what's going to happen. And that's going to be opportunities for the people who are vertically integrated, like Jake and Gino and all the other students that we have who are managing deals. Those are going to be opportunities. The other part is bridge debt. If you went and secured a bridge debt, a loan that is floating with 24 to 36 months, and you have to refinance out of that in the future, and you got that loan at 3.5%, 4%, and you have to refinance out at 6 or even 7 or 8%. Guess what? Those numbers may not work. That operator may be forced to sell. There's yet another opportunity. So there's so many opportunities in this part of the market. Things are resetting so quickly. You just need to be out there. We had a video on the how-to, go back a week or two, and it was talking all about, is this the right time to buy? It's always the right time, but especially now, there's going to be opportunity. When everyone's running to the gates, that's when all the contrarians are doing the opposite, and they're out there making those relationships with the brokers, doing property tours, going to events like Multifamily Mastery 5, November 5th and 6th in Orlando, jakeandgino.com/MM5. You've got to go to events like that, because that's where you're going to meet other operators. That's where you're going to meet other syndicators, other people doing deals. You're going to meet other professionals in the industry. that's where you need to be. But there's going to be a ton of opportunity because these rate hikes, people have fear. When there's fear in the markets and there's uncertainty, when you're teetering on a deal and it's not making sense, and you can put that deal in the market and still make a little bit of a profit, because some of these operators might have bought a deal 2 to 3 years ago and it ran up so much, but right now prices are pulling back. Now's the opportunity to be out there and looking for those types of deals, Jake.
Now, it's a great point. And those who operate well right now in this part of the cycle are going to be rewarded. Look, if you need to get around people that are doing real deals, our community has done over 50,000 apartment units. Gino mentioned Multifamily Mastery 5, November 5th and 6th in Orlando. If you need to get around like-minded folks, check us out, jakegino.com/MM5. But I really do believe the opportunities are going to be around the operators and those that are able to make deals work right now, because we're seeing more deals hit the market now than we have in a very long time. People are hitting the exit button that are not operating well. So being a great operator right now is going to pay off. In addition, if you're trying to get in the game right now, there's more deals hitting the market. So that means there's more opportunity. You're going to get more at bats and hopefully find the one that's right for you. Look, we believe that multifamily housing is a basic human need, and the investor and renter demand remains strong. So that's beautiful. That's very important. Those are basic economic fundamentals. That's why we like multifamily, supply and demand. What do we say here at Jake and Gino? If it don't cash flow, let the grass grow. Our whole goal in all of this is accumulating assets that cash flow and building a cash flow snowball. So if the deal doesn't work, on to the next one. Thank you very much, Mr. and Mrs. Broker. Looks great, just not for me. Get the ones that are going to pay you, okay? That cash flow will keep you alive in years that are lean. Be clear on your path. We like long-term fixed rate financing. You can still find it right now, okay? You got to find a path to get the cash flow and make sure you're fixing your rate for the long term. That's what we do. So, gang, as always, we believe in buying deals with the ability to hold deals for the long term. We think in decades.
I'm Gino. He's Jake. We are Jake and Gino. See you all at the Financial Vacation for Smart People, November 5th and 6th in sunny Orlando. JakeandGino.com/MM5. Let's make it happen, everyone.